Morning to all traders and welcome to this Thursday's Markets Insights video. Today we're going to have a quick look in the markets of oil and also of gold. Investors shifted their positions swiftly yesterday, saying that Joe Biden is indeed pulled ahead some critical states. However, the chances of a divided Congress remain elevated, which obviously means that Biden's plans, if of course he wins the election and if of course we have a divided Congress, means that Joe Biden's plans for clean energy are not going to go down as well as he had promised. Obviously, that is the same story with the tax cuts that have seemed to be supporting the technology sector. For now, as we're not going to get these increase in corporate tax at least. And the bad thing though for the markets currently is the fact that we're not going to see any sort of stimulus coming through in the markets soon, and that seems to be affecting inflation expectations. And yesterday we've seen the prices of oil moving higher, supported also by EIA crude stocks. The weekly report, that was because with Biden not pushing obviously for clean energy, for the clean energy revolution as much as we originally thought in a blue sweep scenario, and then that means that US oil and gas stocks are going to rise, and that includes of course the WTI. Now on the other hand, and related to the particular market, we've had the official withdrawal of the US from Paris Climate Agreement. Obviously, if Biden wins, this is he's going to restart the process of rejoining. Now, I want to start with the prices, the analysis on WTI. Okay, we looked at this for a while. We've been talking about this being an impulse move to the downside. Now, I'm not really connecting here the dots between fundamentals and technicals, and that happened yesterday, because what happened yesterday, it doesn't necessarily mean, this is the final call and we're done with it. We don't have the results out yet completely. So I'm seeing this as 1, 2, 3, 4, and 5. We've been expecting this wave 5 to end around 34.27, as we explained last week, because it's the 100th Fibonacci extension of waves 1, 2, 3, 4. Yeah. Now we've done the 50 Fibonacci retracement and we've had a false break. This usually indicates that there's going to be another move to the upside to take out the 61.8 Fibonacci extension. To me, this suggests that this is a wave A. Okay, 1, 2, 3, 4, and ending diagonal 5. We're going to get a B, and then we're going to get a C. Okay, that will be for, because this is intermediate wave 1, right? That will be for intermediate wave 2. And then we will continue moving lower. Now, if this is indeed the case, we could see prices, if we assume that we're going to end wave B to the 50 Fibonacci, yeah, then what we're going to get is a correction down to 36.42 for wave B, and then a continuation up to around 41, but also it could be anywhere between 39.50 and 41.37, because we are taking into consideration the 61.8 Fibonacci extension of this upside move as well, right? So this is an ABC in my eyes. Now the other scenario, of course, is that we are still moving in the this move down here is still part of this correction to the downside that follows this and then expanded flat. So we've got an ABC over here for wave X and then a Y for wave 4. That means this is a wave 1 instead. We're going to get wave 2, then 3, 4, and 5, and go and take out wave 5 of this impulse move to the upside. That would indicate, of course, that the March low was a reversal point, whereas in the previous scenario, we see the March low being a wave 3. On gold, we were expecting this to be an ABC, if I recall, last week, right? So we've had an AB, if I'm not mistaken, and we were expecting for wave C, yes, in that manner actually. So with this structure coming in, now I'm looking at this as a W, X, and Y correction for wave 4, and then we'll continue up for wave 5, right? Now over here, I don't like this structure as, as a wave 1. If we assume that we ended here, I don't like this structure as a wave 1. And at the same time, I don't really think that we ended up here on it, for example, in a W, X, and Y pattern. Okay, and that's because I see this as an ABC rather than 1, 2, 3, 4, and 5. And this is, of course, has been played out correctly because we moved all the way up here. Now, if we go a little bit closer, we do see also the MACD supporting a little bit an upside move. I see this as an ABC, a correction, and I think we are again moving up for a wave Y. That is, of course, going to be part of this double zigzag, right, in wave X. Now this, if we take into consideration the move from up here to down here, okay, we've done the 38.2 Fibonacci extension and we didn't create a fresh high below this move, right? Now that means most likely we're gonna head back up for the 50 Fibonacci, right? But we need, of course, to break the 1934 first. If we cross above the previous high of 1916, then the first level or zone, let's say, to face would be the 34 and 38, because the 38 is 100 Fibonacci extension of waves X and W in the current market, right? In case, of course, we are going to see prices indeed breaking higher, then we should be looking for the 161 extension, okay, or even the 1.5 extension and the 1961, which is the 50 Fibonacci as well. So the upside here, if it comes through and we don't break this 1974, okay, do not consider this as an impulse to the upside. Most likely it's going to be part of the correction down in wave 4. Thank you for watching, and we'll speak again tomorrow.